Financial literacy. How to manage your banking accounts. We are going to discuss how to choose and manage a bank account. Many people use direct deposit for paychecks and automatic bill pay, so you may wonder why we even need to have an account these days, since cash and checks seem to be almost non-existent. So let's discuss. Today we do not write checks like we once did, but we still need to have bank accounts. We need to have a place for our money to be deposited and withdrawn from. Without the account, none of this activity would be able to take place. Cashing paychecks and paying bills would be a lot more work. There are many different types of accounts. We will be discussing the management of 3 different types of accounts today: checking, savings, and money market accounts. Do you have a bank account? Most of you probably do. You may have opened it yourself with some extra cash that you had, or your parents may have opened one for you when you were little with the birthday money they snuck away, or some extra savings they wanted you to have when you were older. But now that you are old enough to take control of your finances, you are old enough to be in control of managing your bank accounts. That means that you will need to understand how your account works, bank fees, and your personal cash flow. You can find your cash flow by tracking your deposits and your spending habits. Let's talk about the 3 types of accounts we are going to cover. The first one is a checking account. This account is the most basic type of account. We use this account to pay bills and to link debit cards for spending. This account usually has a very low minimum balance requirement. Sometimes there is no requirement at all. The second type of account is a savings account. This is the account that we use to place a larger amount of money that we do not plan on using for a while. Most savings accounts will earn a small amount of interest. Plus, many banks allow for savings and checking accounts to be linked in order to easily transfer money if needed. The third and final account that we will discuss today is the money market account. This account is like a savings account, but with a higher interest rate, and usually requires a higher balance to be maintained. Some banks even offer a limited number of checks to the account holder, but if too many checks are used, customers may have to pay a fee. This can be quite a tricky account. Every bank is different. They each offer different versions of these accounts, usually with options to bundle them together for a better deal, maybe lower fees, higher interest rates, or other marketable perks. To figure out which account would suit your needs best, you will have to read the fine print. There is a lot to think about when opening a bank account. For one thing, there are less and less accounts being offered that do not have monthly fees or charge a transaction fee. You will want to check out multiple banks to see what they are offering to customers. Make sure that you shop around before opening an account. You wouldn't buy a car just because it was the first one you looked at, right? Here are some factors to consider when choosing where you will be opening your account at. Accessibility and convenience. You want to make sure that you have options for completing transactions. You do not want to choose a bank that only has one branch in a 100-mile radius of where you spend most of your time. Make sure that you find a bank that has locations near home, near work, near family members, or school. Fees and service charges. Make sure that you read the fine print. The accounts may sound great, or you may have received an awesome gift for opening that particular account, but there may be hidden fees or balance requirements to get those perks. Read the fine print. You may have to pay a monthly fee if you do not follow the details in the paperwork. Also, look into the service fees. How much will you be charged for insufficient funds, too many ATM transactions per month, or the fee for ATM withdrawals from locations that are not your bank? These can add up quickly, so they are definitely something to pay attention to. Perks like online banking. Online access can really help sell an account. Ask to check out the online banking. Interest is another perk, but not as marketable as it once was. Checking accounts usually pay little to no interest, so it's not something that should really be used to base a decision on. It's not going to benefit you all too much either because of the way that checking accounts are used. And accounts that do pay interest usually have a higher balance requirement, with an associated fee if you drop below that set amount. If you are still in school, you may have some more options. Many banks offer student accounts that do not have required minimum balance, and since they know you are away at school, they sometimes offer free unlimited ATM transactions. This keeps you as a customer so that you do not leave them for another bank closer to your college. And debit cards. Debit cards look and act just like a credit card, but the funds come from your checking account. There is no interest associated with the card. Make sure that you read the fine print for the debit card as well to make sure that you are covered if there is a case of credit card fraud or you have a credit dispute. You will want to make sure that you are protected. Many credit cards will only ask that the customer cover up to $50, and they will absorb the rest. Many banks are providing dispute settlement and limited liability with their debit cards now, but it is something that is worth looking into before signing on. In order to effectively manage your cash flow, you will need to monitor your accounts using these simple steps. Number 1, balance your checkbook. Chances are you will not be using checks or ever write anything in a check register, but you can check your account online each month. Check your statements, tracking your deposits, withdrawals, and fees that you've paid. Number 2, watch out for transactions that just don't look right. Make sure that the purchases on your statements belong to you. You are the best source to find fraudulent activity in your account. Talk to the bank if you think anything is not correct. Number 3, save your statements. You may need them for financial aid verification or for taxes. And number 4, protect yourself against overdrafts. An overdraft, otherwise known as a bounced check, happens when you overcharge a debit card or write a check for an amount that you do not have. This can be embarrassing and costly. You have a couple choices to avoid this. First, you can usually enroll in the overdraft protection program that many banks offer. They will allow you to borrow from them also to cover the amount needed. Or they will allow you to link your savings account to your checking account to cover the need yourself. But they usually charge a small fee for doing this too. By knowing exactly how much money you have in the bank, you are able to make informed decisions about your purchases. If you are not sure how much money you have and you overspend, the penalties associated are usually very high and could throw you off completely for the following month. If you need help along the way, the bank employees can be very helpful. They can answer questions that you may have, or they can point you in the right direction to find information. Good luck with your accounts!